How are you doing, guys? In this video, I will talk about a stock that operates in the semiconductor industry and you should put on your watch list. I will start by introducing the company, then I will talk about their product and business model. I will talk about their financials, and eventually I will tell you what, in my opinion, might be a good entry price. Everything I say is not a financial advice, I'm just sharing my point of view. So make sure you research the stock yourself if you decide to invest. So the company is ARM Holdings, ticker ARM. The company is a global semiconductor company that specializes in designing processors. ARM does not manufacture its own processors. Instead, they are a fabless semiconductor company, meaning they only design processor architectures and license them to other companies such as Apple, Qualcomm, and Nvidia. These companies, like Apple and Qualcomm, then manufacture chips using ARM's designs at third-party semiconductor fabrication plants such as TSMC or Samsung. Now, Nvidia initially announced plans to acquire ARM from SoftBank at an initial valuation of $40 billion, and that was back in September 2020. However, the deal didn't go through since authorities in the US and the UK didn't let the merger happen because they were concerned about competition and the impact on ARM's naturality in the semiconductor industry. Now, let's have a few words about their business model. Now, as I said, ARM does not manufacture their own chips. Instead, they license their designs to other companies, including Apple and Samsung, who buy ARM designs to manufacture their own chips. ARM is best known for designing power-efficient processor architectures, which are widely used in smartphones, tablets, and other IoT devices. Now let's have a quick look about their financial situation. Their sales grew from $2 billion to approximately $3.2 billion from 2020 to 2023. We can see that in the last year, revenue grew by about 20%. Their gross profit is pretty solid, even for a software company. Their gross profit is around 90 to 95% in the past 4 years, which is very impressive. When we look at the cash from operation, we see they have a positive cash from operation, and it also has, it looks pretty solid. For example, in 2023, it accounts for around 33% out of revenue. So I would consider the company risk profile or financial profile are pretty solid because at the moment they don't really need to issue more shares or to use loans to continue in operating in the way they do at the moment. Now, when it comes to their current valuation, I was trying to make a comparison between similar companies. So I've took ARM, which is the company we're talking about. I've compared them to AMD, Qualcomm, Micron, and Nvidia. And I was looking at the price to sales ratio, which is a widely used ratio when it comes to software as service companies. So we can see that at the moment their price to sales ratio is around 45. In the past 1.5 years since the company was IPO'd, the ratio was moving between 25 to 55 price to sales ratio. I would consider the current ratio pretty high. What I'm doing is I would look at this company further ahead when I see the price to sales ratio would go below 30, and then I will try to figure out whether I like the company situation at the moment, and I will go from there. But at the moment, it feels like the price went a little high, and at the moment, I would like to wait a little more. Alright guys, thank you for watching the video. Hope it helped you understand a little more about ARM, and I will see you in the next one.